Hi, and welcome to Investment Banking University. We're talking about the second step in the front office investment banking process, which of course is going to be mandate target matching process. And so we're going to start by analyzing the table of contents. We're first just going to recap what we've talked about previously in the last two presentations, the front office investment banking process. And then we're going to go into understanding why we do mandate target matching in the first place, understand then the actual process of mandate target matching, identifying strategic and financial buyers, obtaining investment mandates, structuring buy-side engagements, and then ultimately identifying targets, which is going to be the matching portion of the mandate target matching. So just to recap, the front office investment banking process starts out with coverage, which we've discussed in the previous presentation, and then gone into the mandate target matching, which we're going to be talking about here, which then flows into origination, fee structuring and winning the mandate, underwriting, packaging, buyer list creation, deal structuring, and then the M&A process. So why do we actually do mandate target matching, and what does it actually mean? So after determining one's own coverage, initiating coverage in the form of index building and building relationships with strategic and financial buyers in a given vertical, it's important for the investment banker to begin matching investment mandates of the strategic and financial buyers to the actual targets within the investment banker's coverage. So what we're ultimately doing is we're taking these relationships that we have on the buy side and matching them to opportunities on the sell side. So what does the mandate target matching process look like? We've got 4 steps here: identifying strategic and financial buyers, obtaining the investment mandates, and then structuring a buy-side engagement, and then ultimately matching that to given targets. So the first step is going to be identifying strategic and financial buyers. So now that we have defined our coverage, we can go about identifying the strategic and financial buyers consistent with that coverage. There are various databases and platforms that we can use to screen for actual buyers, which will end up being corporate M&A departments and financial buyers, as in private equity. And this really just depends on what size of transaction that we're going after. If we're looking at and dealing in the lower middle market and middle market, that's obviously going to be different than if we're dealing with a large cap or a mega cap type opportunity. So in terms of obtaining the actual investment mandates, we reach out to these strategic and financial buyers, and they're going to have criterion within which they actually invest. So some will have certain verticals and sub-verticals they focus on, and the criterion will in fact specify geography, revenue, EBITDA, vertical and sub-vertical coverage, and then there may be even more specific type products that they really like to focus on. So we're going to be able to understand those, and those can be on their website. They may be involved in some marketing material. You may have to reach out and ask for these, and it's a pretty simple process. We just need to be talking to the right person and using the right language, which is what we're going to be talking about. So now that we have obtained these investment mandates, what ultimately happens next is we're going to be structuring the buy side engagement. So we can find boilerplate buy side engagement agreements with these individual strategic and financial buyers. A lot of them already have them in place. So you may be able to find them on their website. They may have something readily accessible, and you may be able to make it a real simple process. For those that haven't really standardized their process, you may need to put something pretty simple together, but it's not very difficult to do. You just need to know what you're doing, know what it looks like, know the fee structure, and it's most likely going to be a success fee basis, and that's what it usually is. So now that we actually have these agreements in place on the buy side, we're going to be going about identifying targets that are consistent with those investment mandates. So we're going to be using and screening for targets using database services such as SalesGenie, and there are other sorts of databases that will be able to pull different types of companies at different levels of revenue that'll be potentially consistent with that. And keep in mind, when you're pulling that initial list, we really need to do our a deep dive analysis on each one of the opportunities to make sure it's going to make sense in terms of their product offering, confirm actual revenue numbers to the best of your ability, understand profitability, and that's where building these relationships and reaching out, which is going to be the next step that we're going to be talking about, origination. So we have just now recapped the mandate to target matching process here at Investment Banking University. For more information, you can go to investmentbankingu.com, register for free. We really look forward to talking to you. Thanks a lot.